If you're looking to buy a home but don't have a deposit, there is an option that could help you. But it's really important to understand both the benefits and the risks. I'm Dan, the mortgage man from Holloway Mortgage Solutions, and this is the Family Assist Mortgage from Beverley Building Society. First of all, how does it work? This mortgage allows you to borrow up to 100% of the purchase price, meaning you don't need a deposit at all. Instead of putting down cash, a family member supports your application by allowing a legal charge to be secured against their property. That charge is 20% of the purchase price. For example, if you're buying a property for $150,000, your family member would provide security of $30,000 against their home. It's also important to know that the charge plus any existing mortgage on the supporter's property cannot exceed 50% of their property value. Who is this actually for? It's available for first-time buyers and what they call resetters. And these are people starting again after something like a divorce or a separation. And what can you buy? Now, this is a little bit different to some other lenders, so you can buy houses or flats, including new builds, but it is only in England or Wales. Let's start with the positives. The biggest one is obvious. You can buy a home with no deposit at all. Now, for a lot of people, saving a deposit is the biggest barrier. This can help you get on the property ladder much sooner. It also means family members don't need to gift cash, which can be more practical. The supporter doesn't own any part of your home, it's still 100% yours. The mortgage is assessed based on your income, not the supporter's, although affordability is based on 5.5 times your income. So if you are able to get at least a 5% deposit together, you may be able to borrow more with a different scheme or lender. And over time, if things go well, the arrangement isn't permanent. The legal charge can be removed once the mortgage reduces to 80% loan to value, or if the mortgage is fully repaid. Let's talk about risks, and these are really important. First, this is a 100% mortgage. That means you start with no equity in the property at all. If property prices were to fall, you could end up in negative equity, where the property is worth less than the mortgage value. That can make it harder to remortgage or move in the future. Secondly, the supporter's home is at risk. Even though the lender would treat it as a last resort, there is still a legal charge on their property. If you are unable to keep up repayments and the property was sold at a loss, the supporter could be liable up to the value of that charge. So this isn't a casual favour, it's a serious financial commitment. There are also some practical risks for the supporter. The charge remains in place even if they pass away or become bankrupt. So if the property is sold, that charge needs to be settled at that point. It could impact their future borrowing options as it is a charge secured against their home, which is why Beverley Building Society require them to take independent legal advice, which is a really important safeguard. Now, let's talk about interest rates. This mortgage is only available on a discounted variable rate. At the time of recording, that's 4.99%, which is a discount off the lender's standard variable rate. But this is subject to change with Beverley Building Society. Now, here's the key point. The rate can go up or down. If the lender increases their standard variable rate, your payments could increase. And there is a floor of 2.50%, meaning it wouldn't go below that, but there's no fixed ceiling. So there is uncertainty compared to a fixed rate mortgage, which you could get if you can get at least a 5% deposit although the fixed rates on a 5% deposit may be higher than this at the time of recording. Now, things to be aware of. Only the borrower is assessed for credit and affordability, and the supporter doesn't receive regular mortgage statements, only the borrower does. There may be valuation costs to consider for one or both properties, and the setup is a bit more complex legally than a standard purchase. Is this a good idea? For the right person and the right family, this can be a really powerful way to get onto the property ladder without a deposit. But it has to be approached carefully because you're taking on more risk as a borrower and your family member is taking on a real financial exposure. If you're considering something like this, it's absolutely crucial that you and your supporter fully understands the commitment involved. Done properly, it can work very well, but it should always be based on clear communication, proper advice, and a realistic view of the risks, not just the opportunity. If you're thinking about buying with no deposit and want to know if this could work for you, feel free to get in touch. I'm always happy to talk you through your options and see what's possible.